the member, please.
Thank you, Satish Kumar, Secretary of Hyderabad Branch. Good evening, all the members, and welcome to today's seminar. Welcome to the speaker, the young and dynamic and energetic Vivek. Thank you, Vivek, for accepting the invitation of Hyderabad Branch and consenting to address on such an important topic. Friends, we are trying to get industry-specific topic so that we can get a 360-degree analysis of all the provisions in a bundle in a one session. So that is why when I discussed this topic with Vivek, he said we can take it up on gems and jewelry. Friends, I would like to inform that sir has already authored a book on GST provisions in gems and jewelry industry. So very young and energetic, resourceful speaker. Welcome. So without wasting much of time, I handed over the proceeding back to Satish Kumar for further proceeding. Thank you for giving me.
Thank you, Deepak. Now I am requesting our Sikasa Chairman ACS Reddy Garu to introduce today's speaker, CA Vivek Agarwal, please.
Thank you, sir. Good evening, everyone, and welcome to the today's session. It's my great pleasure to introduce young and dynamic speaker, CA Vivek Agarwal. He is a qualified chartered accountant, CS and LLB. He is a partner of Hari Agarwal and Associates. His areas of specialized in consultation and advisory in matters of goods and service tax, inspection, search, seizure, and arrest under GST, income tax survey, income tax appeals. He authored a book titled called Taxpayers Practical Guide to GST on Jewelry Trade and Industry, Frequently Asked Questions. Co-author of book titled Taxpayers Practical Guide to Survey under Income Tax Act 1961. Delivered several talks at branches of Institute of Chartered Accountants of India. Regularly contributes videos on GST at various professional. Provides tax updates on WhatsApp group having more than 300 members. This is the brief profile about today's speaker, CA Vivek Agarwal. Over to Secretary.
Yeah, thank you, ACS. Now I am requesting Vivek Bhai to take forward the session, please.
Thank you, everybody. Good evening, everyone. At the outset, I would like to thank the organizers of Hyderabad branch of ICI for giving me this opportunity to deliver a talk on GST implications on gems and jewelry sector. So before we begin the webinar, we'll start it with a short prayer. And I request everybody to repeat after me. The meaning of this prayer is Loka Samastha, which means entire universe. Sukhino Bhavantu. It means may all the souls of the universe be happy and peaceful. So I request everybody to join me in this prayer. Loka Samastha Sukhino Bhavantu. Loka Samastha Sukhino Bhavantu. Loka Samastha Sukhino Bhavantu. Thank you. I'll just share my screen. Yeah, is my screen visible? Right. Okay. So the topic for today's webinar is GST implications on gems and jewelry industry. We will have an interactive session and we'll take up the question and answers at the end. I have designed my presentation in such a way that I'll be completing mostly by 7:30 or so. Then we'll have a discussion thoroughly on this implications, GST implications on this industry. So what I will be covering in this webinar is, we'll be discussing what are the rates, GST rates applicable to gems and jewelry industry. We will be discussing the provisions of GST with respect to job work. As we all know, in gems and jewelry industry, the provisions of job work are extremely important. We will be covering wastage and losses, how to deal with wastage and losses in gems and jewelry industry. There is a very common transaction where old gold is purchased from customers. We will be seeing what are the GST implications on such transaction. We will be dealing with another very important topic of this industry, which is exhibitions. Recently, we know that there was a exhibition at Bangalore, which is IIJS. So what are the different scenarios or GST implications for exhibitions which are held within the state, for exhibitions with us which are held outside the state, for exhibitions which are held abroad also. So we will be comprehensively covering all the areas of exhibitions and the GST implications on that as well. Next, we'll be taking up the composite and mixed supplies. Normally in this type of webinars, we start with composite and mixed supplies. But I know that this is the 5th year of GST and all of us might be thoroughly updated with the provisions of composite and mixed supplies. So I have planned to take up this concept towards the end of my discussion. Let us start. So I request all the members and the participants, as we have this webinar, I request all the participants to interact in the chat box. Let us not post the questions now, because the questions which you might be asking might be covered in my future slides. So the questions will post in Q&A box and we'll take up the questions towards the end. And in the chat box, we'll have an interactive session. So what are the common rates applicable to gems and jewelry industry? So let us start the interaction right from the first question itself. I just want you to reply in the chat box, what is the GST rate on jewelry? Mohit Agarwal ji has replied immediately, saying it as 3%. Aman ji is also saying 3%. Avinash ji is also 3%. Excellent. So we all know that the GST rate on jewelry is 3%. Now, next question, what is the GST rate on job work of jewelry? Please mention your answers in the chat box. Deepak sir is saying 5%, right sir? Avinash ji is saying 5%. Balakrishnan ji is saying 18%. I'll come to 18%, Balakrishnan ji. I'll explain when 5% is applicable and when 18% is applicable. Perfect. Now coming to the third question. What is the GST rate for supply of loose diamonds or stones? 0.25%. Our vice chairman is super fast. Avinash ji, Mohit ji, everybody is saying 0.25%. Perfect. Now last question, what is the GST rate for repair? 18%. Deepak sir, absolutely right. Okay. So these are the common rates which are applicable to gems and jewelry industry. The gold jewelry is taxable at 3%. Gold bullion is also taxable at 3%. Loose diamonds or precious or semi-precious stones are taxable at 0.25%. Job work is 5%. Job work in relation to diamonds is 1.5%. And residuary services, that is repair, is 18%. Now let us first discuss what are the GST implications on job work for jewelry. We all know, I know that all of us know the provisions of GST, but it is my duty to brush up the provisions and then discuss the scenarios which will be relevant to the jewelry industry. So section 2 clause 68 says, job work means any treatment or process undertaken by a person on goods belonging to another registered person. The most important point of the discussion is this. So job work means any treatment or process on goods belonging to another registered person. Based on these two words, the GST rate will change. Now, can you just mention in the chat box what is the GST rate on making charges if the principal is a registered person? Please post your replies in the chat box. What is the GST rate on making charges if the principal is a registered person? Deepak sir is saying 5%, Mohit ji is saying 5%. Perfect. Kalyan ji is also saying 5%. Excellent. Now, next question, what is the GST rate on making charges if the principal is an unregistered person? Please mention your answers. Yes. Mohit ji is saying 18%. Kalyan ji is also saying 18%. Perfect. Let us proceed. So thus, in case the person who is sending the goods for job work is a registered person, then GST at the rate of 5% is applicable. In case the principal is an unregistered person, it would not fall in the definition of job work. Hence, GST at the rate of 18% would be applicable. Let us understand this with the help of some examples. Mrs. A is unregistered. She gives pure gold to ABC Jewellers, which is registered under GST. ABC Jewellers issues this to Karigar, who is unregistered. Karigar converts pure gold into an ornament and gives it to ABC Jewellers. ABC Jewellers gives this back to or sells it to Mrs. A. So coming to the first transaction, which is between Mrs. A and ABC Jewellers. In this transaction, Mrs. A is giving gold to ABC Jewellers. Mrs. A is unregistered. Hence, this transaction will not fall in the definition of job work. And on this transaction, GST at the rate of 18% is to be charged by ABC Jewellers. Now coming to the second limb of the transaction, which is between ABC Jewellers and Karigar. Here, ABC Jewellers is a registered person. Karigar is unregistered. Now, as Karigar is unregistered, there is no question of GST. Karigar will not be charging any GST. And we all are aware that there is no RCM also now. So for this transaction, there is no GST leviability. And here, when ABC Jewellers issues an invoice to Mrs. A, ABC Jewellers will charge GST at the rate of 18%. Next example. Here, Mrs. A is again unregistered. She gives pure gold to ABC Jewellers, which is registered in GST. Here, Karigar is registered. Now, for the transaction between Mrs. A and ABC Jewellers, GST at the rate of 18% is applicable. For the transaction between ABC Jewellers and Karigar, as Karigar is registered, ABC Jewellers, being the principal, is also registered. So the transaction between ABC Jewellers and Karigar would fall in the definition of job work. Hence, the Karigar will charge GST at the rate of 5% on making charges. Now coming to the next example. PQR Jewellers registered under GST. This transaction is very common in this jewelry industry, where the retailers give pure gold to wholesalers for getting the gold converted into an ornament. So PQR Jewellers is registered under GST. They give pure gold to ABC Jewellers. ABC Jewellers in turn issues this pure gold to Karigar, who is unregistered. So for the first transaction, as PQR Jewellers is a registered person, the transaction between PQR Jewellers and ABC Jewellers falls in the definition of job work. Hence, ABC Jewellers will levy GST at the rate of 5%. For the transaction between ABC Jewellers and Karigar, as Karigar is unregistered, the Karigar will not charge GST and no RCM as well. Next example. PQR Jewelers is registered under GST. ABC Jewelers is registered under GST. Karigar is also registered under GST. Now, for the first transaction between PQR Jewelers and ABC Jewelers, it will fall under the definition of job work. ABC Jewelers will charge GST at the rate of 5%. For the second transaction between ABC Jewelers and Karigar, ABC Jewelers is a registered person. The transaction between ABC Jewelers and Karigar is a job work transaction, and GST at the rate of 5% will be applicable. Now, what is the job work procedure in GST? Section 143 says that a registered person, hereinafter in this section referred to as the principal, may, under an intimation, so it is at the option of the principal to opt for the provisions of section 143 or not. And the principal, under an intimation, opt for the provisions of section 143. And subject to such conditions, send any inputs or capital goods without payment of tax. And for inputs, the time limit is 1 year. And for capital goods, the time limit is 3 years, as we all are aware. So I'm skipping those provisions, as I'm presuming that all of us would know those provisions. Let us see some examples. So sending to or receiving from job worker, any of the two options can be opted by the principal. So the principal can opt for any of the two options. First, the principal can opt for section 143, and the principal can supply inputs or capital goods to the job worker and get back the ornaments from the job worker. In this case, when the provisions of section 143 is opted by the principal is required to file form ITC 04, and GST is not applicable on this transaction. Option number 2, the principal will not opt for the provisions of section 143. The principal will send inputs or capital goods to the job worker on payment of GST and gets back the finished product from the job worker. Again, for this transaction of return from job worker to principal, again GST is applicable. So if the principal opts for section 143, for the movement of goods between the principal and the job worker, GST is not required to be paid, but ITC 04 form is to be filed. Option number 2, for the movement between principal and job worker, the movement will be deemed as supply and GST would be applicable. But in the second option, ITC 04 is not required to be filed. So there was a circular number 38/2012-2018 dated 26th March 2018. In this, the provisions of job work were discussed very deeply and comprehensively. So we'll just directly read from the circular itself. So as per clause 68, this defines the job work definition. This gives the job work definition. So the registered person on whose goods, inputs or capital goods, job work is performed is called the principal. The registered person may, without payment of tax, send inputs or capital goods to a job worker for job work. Subsequently, on completion of job work by the last job worker, the principal shall either bring back the goods to his place of business or supply directly from the place of job work. For inputs, it is 1 year, and for capital goods, it is 3 years. Now, the responsibility to keep the proper accounts of job work transactions is of the principal. Moreover, the time frame of 1 year or 3 years for bringing back or supplying, for further supplying the inputs or capital goods, if this time limit is not followed, then the original supply or the original date when the principal has sent out the inputs or capital goods to the job worker, from that date, it will be termed as supply. And it is the principal's responsibility for sending the goods to the job worker and even receiving the goods from the job worker. Job worker, in addition to the goods received from the principal, can use his own goods for providing the services of job work. This point is also of much relevance in the jewelry industry, because we see many a times that when the pure gold is given by the principal to the job worker, in addition to providing the services, will also add alloy or gold or diamonds. So this circular says that it is not necessary that the job worker should provide only services. The job worker, for providing the services, can use other goods also. So the job worker is required to obtain registration only in cases. So this point we'll discuss with the help of a flow chart. Registration for job worker. We know as per section 24, where compulsory registration is required. Notwithstanding anything contained in subsection 1 of section 22, the following categories of persons shall be required to be registered under this act. That is, the persons making interstate supply of taxable supply. So if a person is making interstate supply, the person is required to take or obtain registration in GST. Let us discuss it with a flow chart. The principal is in Telangana. He has a job worker who is also in Telangana. Job worker A's aggregate turnover is less than or equal to 20 lakhs. Job worker A is not required to obtain GST registration. Principal also has another job worker B, who has aggregate turnover more than 20 lakhs. And for this job worker B, GST registration is required. Another flow chart. Now, principal is in Telangana, job worker is in Maharashtra. Now, as per the provisions of section 24, if a person is making interstate supply of goods, then the person is compulsorily required to get registered in GST. In this case, exemption is provided from compulsory registration if the aggregate turnover of the job worker is less than or equal to 20 lakhs. And this notification screenshot, you can find it here. So 13th October 2017, notification number 10/2017. Persons making interstate supply of taxable services and having an aggregate turnover of not exceeding 20 lakhs in a financial year shall be exempted from obtaining registration in GST. So irrespective of whether the principal and the job worker are situated in the same state or separate state, to decide the GST registration applicability for the job worker, we have to check the limit of 20 lakhs. If the aggregate turnover is more than 20 lakhs, then GST registration is required for the job worker. And if the aggregate turnover is less than or equal to 20 lakhs, then GST registration is not required. Let us continue with the circular. Yes. So now this, where goods are sent by principal to only one job worker, the principal shall prepare delivery challan in triplicate. This is an important point. I see that in most of the cases, when the cases come for consultation, this concept of delivery challan is not being followed. They are following the concept of tax invoices, debit and credit notes, but this concept of delivery challan is not being followed by most of the jewelers. So when the jewelry is moving out from the principal's place of business to the job worker, the principal shall prepare a delivery challan as per rule 55 in triplicate. One copy will be retained by the principal himself, and two copies must be accompanied with the goods which are going to the job worker. Now, job worker, after completing the job work, will take one copy of the delivery challan, endorse it, and send it back to the principal. So here, this is very important, that whenever the goods are moving out of the principal's place of business, or when the principal is receiving the goods back, delivery challan should be used. And I see in almost 90% of the cases, Rule 55 delivery challan is not being prepared. And for this, one of the main challenges that the jewelers are saying is, most of the times, the karigar is an unregistered person, is a very small person. He does not have the required machinery to prepare delivery challan at the time of return of goods. So in this circular, it is clearly mentioned that for this all movement, it is the responsibility of the principal to ensure that the movement happens through delivery challan. And when the principal sends the two copies, job worker can at least sign and issue the second copy while returning the goods from the job worker's premises. Similar provisions are contained for the case where the goods are, or the jewelry is moved from one job worker to another. This is also a common transaction in jewelry industry, where the job worker one will prepare the ghat. They call it as a ghat, where they prepare the overall design of the jewelry with gold. Then another job worker will fit stones and diamonds to it. So the goods will move from principal to job worker, and from one job worker to another job worker also. So in such cases, the goods may move under the cover of a challan issued either by the principal or the job worker. Either of them can issue. In the alternative, the challan issued by the principal may be endorsed by the job worker, sending the goods to another job worker, indicating therein the quantity and description of the goods being sent. So when we see the overall procedure, when the principal is sending the gold to the job worker one, he will keep one delivery challan with himself. Two delivery challans will be accompanied with the jewelry, or with the gold to be precise, to job worker one. Now job worker one has two options. Option number one, if after converting the gold into an ornament, the job worker is returning the gold to the principal, he can pick one copy of delivery challan and give it to the principal along with the jewelry. Second scenario, when job worker one is further sending the ghat to another job worker for fitting of stones and diamonds, he can either issue a delivery challan afresh, or he can take the old delivery challan issued by the principal, endorse it, and mention the quantity and description of the good that is sending to another job worker. Where the goods are returned to the principal by the job worker should send one copy of the challan received by him from the principal while returning the goods to the principal after carrying out the job work. Where the goods are sent directly by the supplier to the job worker. This is also a very common transaction in jewelry industry, where the principal is located in Hyderabad, the supplier is located in Mumbai, the job worker is also located in Mumbai, Zaveri Bazaar, or loose diamonds are sourced from Gujarat, Surat. The job worker is located in Mumbai. The principal, being in Hyderabad, purchases loose diamonds from Surat and gets it directly delivered to the job worker in Mumbai. This is a very common transaction, which we say that it is a bill to ship to transaction, which we all are aware. So in this case, the goods may move from the place of business of the supplier, in our example, let us say Surat, to the place of business of the job worker, say in Mumbai, with a copy of the invoice issued by the supplier in the name of the buyer, wherein the place of delivery will be mentioned as job worker's name and address. Now the buyer, that is the principal based in Hyderabad, will issue a delivery challan and send it to the job worker directly. So this is the procedure for movement of jewelry in the case of bill to ship to transaction with respect to jewelry industry. Now this fifth point is also extremely important and very, very common in jewelry industry. Here what happens is the wholesaler, let us say ABC Jewelers, issues example 1 kg of gold to the job worker. Why to issue the gold separately for each transaction? What ABC Jewelers will do is that they'll have common karigars, maybe in Old City or any place. So they'll have some common karigars. What ABC Jewelers will do is they will give 1 kg of gold to the job worker and ask him to keep it with himself. And whenever they get order from the retailers, they ask the job worker to prepare an ornament and send the ornament back to the principal. Now in this case, delivery challan linking is not possible. If suppose ABC Jewelers is sending gold to the job worker and job worker is converting that gold into an ornament and sending it back to the principal, then delivery challan linking is possible that, okay, through this delivery challan I have issued and through this delivery challan I have received. But in this case, what happens is the principal will issue the delivery challan, one delivery challan, but the job worker will issue multiple delivery challans depending upon the requirements of the principal. So in this case, what is the procedure? In case the goods after carrying out the job work are sent in piecemeal quantities by a job worker to another job worker or to the principal, the challan originally issued by the principal cannot be endorsed and a fresh challan is required to be issued by the job worker. Now, next important point is, we read in the provisions that the registered person, the provisions of section 143, that the registered person under an intimation issue the goods to the job worker without payment of tax. So what is this intimation? This intimation is nothing but filing of form ITC 04. And again, to my surprise, most of the jewelers who are coming for consultation, we see that most of them are not filing ITC 04. They are thinking provisions of section 143 is there by default to them, and they can send and receive goods from into job worker without filing ITC 04. After 5 years of GST also, I get calls from them asking, is filing of ITC 04 important? Is filing of ITC 04 mandatory? I have not filed my ITC 04 till now. What should I do? And recently, I had even got a call from a retail jeweler. He said at the time of GST audit, the officer located that ITC 04 form was not filed, and he had given some consequence, which we will be discussing in the slides to come. So this form is extremely important because this serves as an intimation where the principal is filing ITC 04. It serves as an intimation to the commissioner that, yes, I am opting for the provisions of section 143. So it is clarified that it is the responsibility of the principal to include the details of all the challans relating to job work, which he sends and receives back in form ITC 04. Now, supply of job work services. The job worker as a supplier of services is liable to pay GST if he is liable to be registered. And the supply would include not only the service charges, but also the value of goods or services used by him for supplying the job work services if recovered from the principal. Now, in the circular, page number 10, I will be sharing this link of Evernote with all the participants and with the branch. In this, all the circulars, everything will be as it is, which you can also refer. And I have intentionally taken the circular directly because that gives us some comfort that we are reading out the circular directly. So we will be sharing this link with all the participants, so there is nothing to note. Now, this circular talks about violation of conditions laid down under section 143. This circular talks about the violation of not bringing the inputs within the specified time of 1 year, or not bringing the capital goods within the specified time of 3 years. But the circular does not talk about what would be the consequence of non-filing of ITC 04. Will it lead to violation of section 143 or not? The last point of the circular talks about the availability of input tax credit. This is very clear to all of us. Still, for the subject of, for the topic that I have on hand, I'll just repeat that. The principal will get the ITC for the inputs or capital goods that the principal is purchasing. The principal will also get the ITC for the inputs or capital goods purchased by principal delivered at job worker's premises. Job worker, if registered, can claim ITC for the inputs or services used by him for converting the gold into an ornament. If the job worker is unregistered, there is obviously no question of ITC. Registration of job work we have already discussed. Now I want all the participants, all the friends to again come back to the chat and let me know what are the consequences of non-filing of ITC 04. Now this question has become extremely important. Most of the jewelers are asking only one question in all their in the association meetings and webinars. So let us just discuss over chat what are the consequences of non-filing of ITC 04. Mohitji, you have asked some question. We'll take up the question towards the end, Mohitji. I've read the question. Just mention the question and answers box. We'll take it up surely after the webinar is done. So I request the participants to mention the consequences of non-filing of ITC 04. And I think this is one of the most important and the drastic impact that would have on jewelry industry because of this form. So Mr. Abhijit is saying interest liability. No other replies I have received in the chat box yet. Mr. Kalyan is saying no interest liability. Any other replies? Samba Shivaji is saying interest liability. Excellent. Sarang Shahji is saying supply. I think what you mean is the as per the provisions of section 143. I will discuss on that. I think that both of our answers are matching with that word. Fine. So I'll just proceed with that. Now, what are the consequences of non-filing of ITC 04? This is very important. I said that I received a call from a retail jeweler where GST audit was conducted. He said that the officer, after completion of audit, levied a penalty of 50,000 under section 125, saying that for ITC 04, there is no late fee, penalty, or anything prescribed anywhere in the Act. So he can take the powers from section 125 and levy a penalty of 50,000. We know that section 125 talks about penalty of up to 50,000. And when I say 50,000, I mean total of CGST and SGST. So, but to harass the taxpayers, the officer has said that he will levy a penalty of 50,000. When now what has to be done? They have not filed ITC 04. So this is one consequence which the officers are targeting the jewelry industry with. because they know that jewelry industry is not filing ITC 04 form promptly. Secondly, this is just my opinion, which I'm thinking. We said that if the provisions of section 143 are violated, then the principal would fall out of the provisions of or the benefit of section 143. Now, if the principal is falling out of section 143, section 143 says that the principal can move the goods to and fro from the job worker without payment of tax. Now, the principal is falling out of section 143. Now, the consequences of this would be more severe than general penalty of up to 50,000, because the officer can say that since 2017, whatever transactions you have done between you and the job worker, all the transactions would be deemed as supply and GST would be applicable. Now, as GST is applicable, you have to pay interest also, you have to pay penalty also, and it can be considered that you have suppressed your transactions, you have hidden your transactions from the department. So I foresee that in the case of GST audit of jewelry industry, this will be one point which the department will trouble the jewelers with. And if any of these two consequences are initiated, then unnecessary the stress will begin to the jewelers. I don't know why they are not filing ITC 04. They're moving the goods along with delivery challan. Some still they are. I see that when I handle the GST audit of some of the jewelry cases, I see that still they are following the old provisions only, where issue voucher is prepared, receipt voucher is prepared. So preparing issue or receipt voucher is not the concern here. It is important that the document should be a delivery challan after the implementation of GST. So they are still unaware, or they are not interested to understand the impact of non-filing of ITC 04 or non-filing or non-compliance of using a delivery challan. So, but let us all ensure that at least all our clients follow this ITC 04 correctly. We all know that recently in the GST Council meeting, ITC 04 filing due dates have been relaxed, where the taxpayers whose annual aggregate turnover in the preceding financial year is above 5 crores, they have to furnish ITC 04 once in 6 months. And for the taxpayers whose annual aggregate turnover is up to 5 crores in the preceding financial year, and they should file ITC 04 annually. And extract of the notification is also there in this. So this link, you'll get it as it is. So notification number 35/2021 dated 24th September 2021. In rule 45, during a quarter, the words during a specified period shall be substituted. The said quarter, the words said period will be substituted. And the specified period shall mean 6 consecutive months commencing from 1st day of April and the 1st day of October in respect of a principal whose aggregate turnover during the immediately preceding financial year exceeds 5 crore rupees, and a financial year in any other case. So this has been notified from 1st day of October 2021. Format of ITC 04. I'm sure that all the participants would have seen the format of ITC 04, but yes, there were a lot of technical issues while filing of ITC 04, and still there are some difficulties. So I'll be just rushing up or revising the form quickly. The form ITC 04, details of goods or capital goods sent to job worker and received back. Both the transactions must be mentioned by the principal. So what are the details required for sending the goods for job work? GSTN of the job worker if the job worker is registered, state if the job worker is unregistered, challan number, DC date, description of goods, quantity, value, rate of tax, fine. Now, what are the details required to be filled in by the principal for receiving the goods back or the jewelry back or the ornament back from the job worker? Again, GST of the job worker, delivery challan issued by the job worker, date of challan issued by the job worker, description of goods, quantity. Now the details of original challan number are also required to be mentioned. As we were discussing in the circular, if there is one-to-one linkage between the delivery challan that the principal is issuing and the principal is receiving, it is easy to fill up this. But if there is no linkage and the job worker is sending the ornaments in piecemeal, then how should we fill ITC 04? That also is clarified in this. The nature of job work done, the losses and waste are also required to be mentioned. What is the quantity of wastage? Now the department wants to track what is the because we all know when the principal sends gold to the job worker and the job worker converts that gold into an ornament, there will be some quantity of gold which will be wasted. That waste gold or wastage, which we normally call, that detail also they want. Suppose 100 grams we are sending, 96 grams the principal is receiving, 4 grams must be mentioned here. That 4 grams is the wastage. So the department will know that 4 gram is with the job worker, or if the job worker returns it to the principal, that 4 grams will be with the principal. In the instructions of ITC 04, multiple entry of items for single challan may be filled. It says that suppose I'm sending a delivery challan, the principal ABC Jewelers is sending a delivery challan in which pure gold is mentioned, diamonds are mentioned, stones are mentioned, pearls are mentioned. It is expecting us to mention each item separately. So multiple entry of items for single challan may be filled. Now, are they expecting us to link all that with again the ornament? We have to see. Next instruction talks about columns 7 and 8 in table A, table B, and table C may not be filled where one-to-one correspondence between the goods sent for job work, pure gold sent for job work, and ornaments received back from the job work is not possible. So they have given some relaxation here. Column number 7 and 8 are what? You can see column number 7 and 8, where the details of original delivery challan must be mentioned. It says that if you can link the original challan with the jewelry received back from the job worker, then you can mention the details of original challan in this. And if you cannot link, then you can leave this blank. Next, very important discussion for jewelry industry is wastage and scrap. To decide the GST implications on wastage and scrap, we should first understand whether the wastage is recoverable or not. Because when the pure gold is converted into an ornament, there will be some wastage which will be like in the form of a dust. And that dust will be scattered around the job worker. So that is not recoverable. That we cannot say that it is recoverable. So first we need to decide the wastage which we are talking about is recoverable or not. If the wastage is recoverable and that wastage is sold, then obviously GST would be applicable. If wastage is not recoverable, then there is no question of GST. Let us see some example. Principal is issuing 100 grams of pure gold to job worker, and job worker is also returning 100 grams of ornament to the principal. We know that to convert the pure gold into an ornament, there will be some wastage. So here in this case, what the job worker is doing is he's adding the wastage also and ensuring that entire 100 grams is returned back to the principal. So the job worker is not only providing the supply of services, the job worker is also providing the supply of inputs. Now, if the job worker is registered, what would be the GST rate? In the process of converting gold into an ornament, suppose there is a process loss of 4 grams. To cover this loss, job worker includes this value in making charges. And if the job worker is registered, he will charge GST at the rate of 5% on the entire value, because the concept of composite supply will be applicable here. The provision of service of job work is the principal supply, and the gold will be an ancillary supply. Hence, the GST rate applicable to the gold will be the GST rate applicable to the making charges or job work would apply to the entire value. Next example. Principal issues 100 grams of pure gold to the job worker. Job worker returns 96 grams of ornament to the principal. This is a very common transaction. Now, job worker will raise an invoice for making charges, and GST at the rate of 5% would be applicable. Next, very common transaction in jewelry industry is purchase and sale of old jewelry. Mrs. A is not in the business of jewelry and is unregistered, gives her old ring to ABC Jewellers, which is registered in GST. We know that for ABC Jewellers, there is no RCM. Forget about RCM also, as Mrs. X is not in the business of jewelry, it is not a supply, and there is no question of GST or no question of RCM also. And this was provided in the press release dated 13th July 2017. You might be thinking why I am providing all these press release dates which are of 2017. This will help us at the time of GST audit for the 17-18. When our clients will receive GST audit notices for 17-18, many of them might have already received. The department will raise all these queries, and this will help us in replying to them with the exact dates. That press release dated 13th July 2017, it says that even though the sale of old gold by an individual is for a consideration, it cannot be said to be in the course of or furtherance of business, as selling old gold jewelry is not the business of the said individual, and hence does not qualify to be a supply per se. Accordingly, the sale of old jewelry by an individual to a jeweler will not attract the provisions of section 9(4) as well. Next example, XYZ Jewellers is in the business of jewelry but is unregistered, is giving gold ring to ABC Jewellers, which is registered in GST. This transaction, as XYZ Jewellers is in the business of jewelry and it is for consideration, it is a supply, but as XYZ Jewellers is not registered in GST, there is no GST implication and there is no RCM liability also on ABC Jewellers. Next example, XYZ Jewellers is in the business of jewelry and is registered also. XYZ Jewellers gives old gold ring to ABC Jewellers, which is registered in GST. Now, as XYZ Jewellers is already registered in GST, it will charge GST at the rate of 3%. And ABC Jewellers, there is no question of RCM at all. Now, coming to next common transaction in GST, which is about margin scheme under GST. Now, I request the participants to tell me briefly in the chat box, what is the margin scheme in GST for a person dealing in second-hand goods? Yes, Mr. Aman, sir, I can't recall, but there is some circular waiving ITC04. Yes, that circular also we'll discuss. It was, I think, issued in 2019. So let us see. I request the participants to interact and mention what is the margin scheme in GST. Tax on profit only. Excellent, Mr. Narendra ji. Any other replies? Okay, let's proceed. Rule 32 sub rule 5, where a taxable supply is provided by a person dealing in buying and selling of second-hand goods, that is used goods, as such or after minor processing, which does not change the nature of the goods and where no input tax credit has been availed on the purchase of such goods, the value of supply shall be the difference between the selling price and the purchase price. What are the conditions in this? First condition, the person should be dealing in buying and selling of second-hand goods. Second, the person should supply these second-hand goods as such, or the person should supply the second-hand goods with minor processing, which does not change the nature of goods. Fourth, the person should not have claimed input tax credit at the time of purchase of such second-hand goods. If these conditions are fulfilled, then the person can pay GST on difference between the selling price and the purchase price. Let us see some examples in this. Mrs. X is not in business of jewelry. Just a second, please. Mrs. X is not in business of jewelry and unregistered. ABC Jewelers is registered in GST. ABC Jewelers purchases this old gold ring from Mrs. X at rupees 1 lakh. ABC Jewelers registered in GST sells this old gold ring as it is at the rate of 1,50,000 to Mrs. Y. So ABC Jewelers purchases from Mrs. X and sells it to Mrs. Y as it is. Then as per rule 32 sub rule 5, GST is applicable on difference between the sale price and purchase price, which is 50,000. Next example. Mrs. X is not in business of jewelry and is unregistered. ABC Jewelers registered in GST. ABC Jewelers purchases this old gold ring at rupees 1 lakh and sells this old gold ring after polishing, which is minor processing, without changing the nature of the goods, to Mrs. Y at 1,70,000. Even in this case, as per rule 32 sub rule 5, GST is applicable at the rate of GST is applicable on the value of 70,000, 1,70,000 minus rupees 1 lakh. Another example. Mrs. X gives this old gold ring to ABC Jewelers, which is registered in GST. ABC Jewelers purchases this old gold ring at 1 lakh. ABC Jewelers melts the old gold ring, manufactures a new product and sells it at 2 lakhs to Mrs. Y. As this is not a minor processing, hence the provisions of rule 32 sub rule 5 are not applicable and GST is applicable on the entire value of 2 lakh rupees. There is a recent case law on this rule 32 sub rule 5. We will discuss that case law now, or we can say that advanced ruling on it. So authority for advanced ruling in Karnataka dated 9th July 2021 in the case of Messrs. Adhya Gold Private Limited. Whether GST is to be paid only on the difference between the selling price and purchase price as stipulated under rule 32 sub rule 5, if applicant purchases used or second-hand gold jewelry from individuals who are not dealers under GST and at the time of sale there is no change in the form or nature of goods. This was the issue. Facts of the case: the applicant is engaged in the process of buying used or second-hand gold jewelry from unregistered persons. The used gold ornaments are sold in the same form in which they are originally purchased to another person after minor processing such as cleaning, polishing, but without altering the nature of the ornament or jewelry. At present, the applicant was, that is before AR, the applicant was charging GST at the rate of 3% on the entire value to the buyer, and the applicant states that Rule 32 sub Rule 5 will be applicable to his transaction. So the AAR checked the conditions of Rule 32 sub Rule 5. The first condition, as we have seen, that ITC should not have been claimed. So the applicant has purchased used second-hand gold from unregistered person, and there is no question of claiming an input tax credit. Second, goods should be sold as such. Used ornaments once purchased are not melted into bullion before selling the same to another buyer. In some cases, they may sell the jewelry after cleaning or polishing the second-hand ornaments to the buyer. However, the said process does not alter the nature or form of the jewelry. In other words, the nature and form of goods remain the same at the time of purchase and sale in the hands of the applicant. Now, since all the conditions laid down under Rule 32 sub Rule 5 are satisfied, applicant is of the opinion that margin scheme is applicable. The similar issue was even held in the case of Attica Gold Private Limited. Applicant is affecting the supply of second-hand jewelry, which is taxable under the GST Act, as it is covered under entry number 13 of Schedule 5 to the notification so-and-so, which is taxable at the rate of 3%. Hence, the supplier satisfies the condition that the supply made by him must be a taxable supply. Next, the supplier must be a person dealing in buying and selling of second-hand goods. And at the time of sale of second-hand goods to the new customer or another customer, on the invoice, the supplier must mention it as used gold ornaments. Ruling. In the case of applicant dealing in second-hand goods and invoicing his supplies as second-hand goods must be mentioned on the invoice. The valuation of supply of second-hand gold jewelry, which are purchased from the individuals who are not registered under GST, and there is no change in the form and nature of such goods, can be made as prescribed under Rule 32 sub Rule 5. So basically, Rule 32 sub Rule 5 is applicable to the jewelry industry if the provisions are satisfied, if the conditions of the provisions are satisfied. Next, extremely important discussion, which is jewelry taken for exhibitions. It is a very, very common transaction where the jewelers take the jewelry for exhibition purposes within the same state or in another state or even abroad as well. So those provisions we'll be discussing in this segment. Section 22, persons liable for registration. We know that every supplier is liable to get registered from where he makes a taxable supply if his aggregate turnover exceeds 20 lakhs rupees. There is a concept of casual taxable person also, where if the casual taxable person means a person who occasionally undertakes transactions involving supply of goods or services or both in the course or furtherance of business in a state where he has no fixed place of business. So this concept is applicable where the exhibition is for display cum sale, but there is a relaxation for jewelry industry that also we will be discussing. Next, the casual taxable person. So this relaxation which I'm talking about was had mainly come up due to this point where the casual taxable person was required to pay tax in advance on the estimated amount of sale, on the estimated tax liability. So for this, the relaxation was issued, and that circular is circular number 10/10/2017, dated 18th October 2017. Subject: clarification on issues wherein the goods are moved within the state or from the state of registration to another state for supply on approval basis. This relaxation was issued specifically to the jewelry industry because various communications have been received, particularly from the suppliers of jewelry who are registered in one state but may have to visit other states, that is other than the state of registration, and need to carry the goods, that is jewelry, along for approval. Now, if jewelry is approved by the buyer, then the supplier issues a tax invoice. Since the suppliers are not able to ascertain their actual supplies beforehand, because the jewelers will take ornaments to, let us take the example of wholesalers. Wholesalers will take their ornament to different retailers in the same state on approval. So a person from the wholesaler's shop will take, suppose, 10 ornaments and visit several retail shops. They are not sure how much or what will be picked up by the retail jewelers. But for this case, there is no concern as such because it is happening in the same state where the wholesaler has GST registration. Another important or common transaction that we see in this industry is, suppose the wholesaler is registered in Hyderabad, and even in Vijayawada, there are a lot of jewelry shops. So the wholesaler who is registered in Hyderabad takes ornaments to Vijayawada for approval. In Vijayawada, the person will visit several shops, several retail stores, and it is impossible for them to estimate which retailer will pick which jewelry and which will be converted into sale and what would be the estimated tax liability on the same. So such difficulties were being faced by the jewelry industry. So they made representations to the government, and this relaxation was issued precisely for jewelry industry. Let us proceed. The supplier shall issue a delivery challan for the initial transportation of goods where such transportation is for reasons other than by way of supply. We know that in Rule 55, several conditions are mentioned when we can issue delivery challan. One of the conditions is that delivery challan can be issued where for any reason, where the movement of goods is happening for any reason apart from supply, DC can be issued. And moreover, sub-rule 4 of Rule 55 provides that where the goods are being transported, where the goods being transported are for the purpose of supply to the recipient, it is for supply, but the tax invoice could not be issued at the time of removal of goods for the purpose of supply. The supplier can issue a tax invoice after delivery of goods. So based on these two conditions of Rule 55, the government gave this relaxation. Now, a combined reading of the above provisions indicates that the goods which are taken for supply on approval basis can be moved from the place of business of the registered supplier to another place within the same state. That is, ABC Jewelers, who is wholesaler in Hyderabad, can give the ornaments on approval basis to different retailers of Hyderabad on delivery challan, or ABC Jewelers Private Limited, wholesaler in Hyderabad, can give the ornaments on approval to retailers in Vijayawada, that is outside the state, with the help of a delivery challan. When we talk about delivery challan, I remember a recent case where I found that a person from Bangalore had come to Hyderabad to show the jewelry on approval to my client. Now, it is a common practice that we see that the clients don't follow the provisions properly. So the person had brought the goods and given some maybe few ornaments to the client on approval and was taking the goods back, the jewelry back to Bangalore. And in between, there was some check post and the police, it was a big issue out of it, that it was released in press that so many crores of jewelry was seized and all. And the reason was basically the person did not have proper documentation. We see that most of the clients, what they do is they implement the provisions, either they don't implement at all or they implement only to some extent. So when the police person caught hold of this jeweler or wholesaler from Bangalore, on the spot he's calling his accounts department from Bangalore to mail the delivery challan. So all these issues will come up if we don't follow the provisions of GST in a very, that too, which are very simple for us to implement. But let us proceed. So if for any movement of jewelry within the state or outside the state, it can be moved with the help of a delivery challan along with e-way bill wherever applicable. I'll tell you, this point is also important. And the invoice may be issued at the time of delivery of goods. For this purpose, this is an important line. The person who is carrying, now ABC Jewelers is based in Hyderabad. ABC Jewelers person is carrying the ornaments to Vijayawada. So the person can carry the ornaments to Vijayawada on the help of on the basis of a delivery challan. Now, when after reaching Vijayawada, if suppose the retail jeweler selects any ornament, the person can issue a tax invoice on the spot. We know that the provisions of casual taxable person says that if I am registered in Hyderabad in the state of Telangana and I want to make a taxable supply in any other state where I am not registered, I have to take a temporary registration in the form of casual taxable person. But there is a relaxation for jewelry industry here. The government says that you don't have to obtain a casual taxable person registration here. You can carry the ornaments to the other state with the help of a delivery challan on approval. Once the sale is made there, from there itself, your person can issue a tax invoice by mentioning IGST. So this was the circular here. Now, this circular we have discussed for what? This circular number 10/2017, we had discussed for movement of jewelry within the state or movement of jewelry outside the state of registration on approval basis or for exhibition basis. Now there is another circular which clarifies the procedure for movement of jewelry abroad. So if these two circulars we read, we will understand all the provisions of GST with respect to movement of jewelry within the state, outside the state, or even abroad. Now, circular for movement of jewelry abroad, circular number 108/2019, 108/27/2019, dated 18th July 2019. This circular is also very important because we had represented this case of some wholesaler. The issue was that initially in 2017, if many of my friends would remember, that in 2017 they had an exhibition in Dubai and they were taking jewelry to Dubai for exhibition purposes. So at the time of taking the jewelry abroad, there was no much concern or hassle. And after the exhibition, they brought back the jewelry to Hyderabad and they continued their business. After some days, they got show cause notices from the customs department saying that they have to pay duty at the time of re-import of jewelry. And they made the clients pay that amount. So this case we had represented with the help of this circular. We were able to get the refund of the amount paid. So let us see the circular which talks about how the movement should happen abroad. How should we take the jewelry out of India and how should we take the jewelry, bring back the jewelry to India. So clarification in respect of goods sent or taken out of India for exhibition or on consignment basis for export promotion. As per section 7 of the CGST Act, for any activity or transaction to be considered as a supply, it must satisfy two conditions. Condition number one, it should be for a consideration and it should be in the course or furtherance of business. Then section 16 of IGST Act deals with zero rated supply. Zero rated supply means any of the following supplies of goods or services or both, namely export of goods or services or both, or supply of goods or services or both to an SEZ. Therefore, it can be concluded that only such supplies which are either export or supply to SEZ would qualify as zero rated supply. So for a transaction to be a zero rated supply, first it must fall in the definition of supply. Then only there is question of zero rated supply or not. So it is accordingly clarified that the activity of sending or taking the goods out of India for exhibition, the activity of taking the jewelry out of India for exhibition on consignment basis do not constitute supply. It is not a supply at all, as there is no consideration at that point in time. Since such activity is not a supply, the same cannot be considered as zero rated supply. When the transaction is not a supply at all, forget about zero rated supply. Now, what is the procedure for it? The first point says that what is the record that the registered person should maintain for moving the jewelry for exhibition abroad, which is given in the annexure to the circular, which we will discuss towards the end of the circular. Now, what is the documentation required for sending or taking the goods out of India? The said activity is in the nature of sale on approval basis. And for moving the jewelry from Hyderabad to, suppose, New York, delivery challan can be used. And the goods shall be accompanied with the help of a delivery challan. And the activity of sending or taking the goods out of India is not a zero rated supply. Thus, execution of a bond or LUT is also not required. Now, when is the supply of the goods sent or taken out of India said to have taken place? The goods which are taken out of India are required to be either sold or brought back to India within a period of 6 months from the date of first removal. We know that the provisions of sale on approval gives the time limit of 6 months. The same time limit is applicable here as well. So the supply would be deemed to have taken place on the expiry of 6 months from the date of removal. From the date of removal, the time period of 6 months will be calculated. If the specified goods, that is jewelry, is sold abroad within the specified period of 6 months, the supply is effected in respect of the quantity so sold on the date of such sale. We will discuss some examples also for this. Now, whether invoice is required to be issued when the goods are sent and are not brought back within 6 months. So when the goods are sent and not brought back within 6 months, the sender shall issue a tax invoice. So basically this says that if you are moving the jewelry from Hyderabad to New York, you have to carry it with the help of a delivery challan. If you are making any sale there, you can issue a tax invoice. If you're not making the sale, you can bring back the goods within 6 months. If you don't bring back the goods within 6 months, nor you make a sale there, then after the expiry of 6 months, it will be deemed as supply and tax invoice is required to be raised. So when the goods are neither sold nor brought back within 6 months, sender shall issue a tax invoice on the date of expiry of 6 months from the date of removal. Let us see 2 examples which are given in the circular itself. Messrs. ABC Jewellers sends 100 units of jewelry, and this activity of sending the jewelry to New York is not a supply, so no tax invoice is required. It can be moved with the help of a delivery challan. The jewelry which is brought back within 6 months from the date of removal, no tax invoice is also required to be issued, as no supply has taken place. Entire quantity is neither sold nor brought back within 6 months from the date of removal, then a tax invoice is required to be issued for the entire quantity. Next example, ABC Jewelers sends 100 units of jewelry out of India. The activity of sending is again not a supply, no tax invoice, delivery challan must be used for the supply. Now at the exhibition, if 10 units or 10 ornaments are sold, then another 50 ornaments are also sold. Tax invoice is required to be issued for this 10 ornaments and 50 ornaments, and balance 40 ornaments can be brought back to India with the help of a delivery challan. Even in this case, I recently had a meeting with a retail jeweler who conducts exhibition in different states or different places abroad and has made the sale. They were having an issue of closure of shipping bills. The concern there was they had taken the jewelry out of India, and after making the sale there, now the person had taken the jewelry on book value to a place outside India. There, while making the sale, they have charged their profit also, and they have raised a tax invoice. Now, as per the records of their AD banker, higher amount was showing as receivable, and when they received the money from the customers, the AD bankers were issuing notice that still you had to receive the balance amount of foreign currency. And in another example, they had taken the jewelry at book value, made the sale along with profit. Again, that was not updated in the bank, and they received the amount in dollars more than what was mentioned. Again, they got a notice from the AD bank that you have said that $100 is to be received, now you have received $120. So here the responsibility comes where we have to ensure that such transactions are properly updated with the AD banker also, so that the foreign currency receivable and receipts are properly knocked off, and we maintain the copies of EBRC or FIRC as a confirmation that we have received the foreign currency. Now, we had said in the first point that the principal who is taking the jewelry out of India has to maintain some record. What is that record? So he has to maintain the folio number, the description of the jewelry, the quantity of the jewelry, the value per unit of jewelry, that is rate per unit, the total value of the jewelry, the date of removal, delivery challan number and date, the shipping bill number and date, details of specified goods, that is jewelry, invoice number and date for the actual sale which has happened at the exhibition, the details of specified goods brought back, the jewelry that the principal has brought back, and bill of entry number and date. So this record will help us in understanding the entire transaction properly, so that we are seeing that in many of the cases the customs department is issuing notices for the exports of 2017, 2018 and asking the jewelers to explain the transaction and match with the BRC certificates. So such documents and records will help us in submitting replies to such notices promptly and correctly. So to summarize the discussion on exhibitions, as this is a very important phenomena in jewelry industry, I have prepared this chart. So exhibitions can happen in the same state. So let us take the state of Telangana, as we are already in. So if the exhibition happens in the same state, generally it happens, UBM exhibition happens in Novotel in Hyderabad. So same state exhibition, that is UBM. Another state which is very common is IIJS, which happens generally in Mumbai. This year it has happened in Bangalore. An exhibition can happen abroad, where generally they have exhibitions in Dubai, Hong Kong, New York and other places. So for all this movement of jewelry, delivery challan is important, delivery challan is required. We are clear. Now the question comes, I'll ask again to all the participants, whether e-way bill provisions are applicable to jewelry industry. Please mention the chat box. Mohit ji says e-waybill provisions are not applicable to jewelry industry. Lokesh ji also says e-waybill provisions are not applicable. Narendra ji also says no, it is not applicable. Fair enough. I understand that all of us know that the e-waybill provisions are not applicable to jewelry. Here I would like to emphasize that e-waybill provisions are not applicable to jewelry. We cannot say that e-waybill provisions are not applicable to the jewelry industry as such. There is a difference between the two. What is the difference? ABC Jewelers of Hyderabad is taking jewelry to Bangalore. ABC Jewelers of Hyderabad, is taking the jewelry to Bangalore for exhibition purpose at IIJS. Now, for movement of jewelry, we know that e-waybill provisions are not applicable. We also know that for jewelry industry, display items are very important. Lakhs of rupees of display items are used by the jewelers to showcase their jewelry. So ABC Jewelers of Hyderabad is moving the packaging item, the display items, all these items also to IIJS Bangalore. Now, as per our discussion, e-waybill is not required to be generated. For the movement of jewelry, we know that that relaxation is there. But for the movement of any items apart from jewelry, that is display items, packaging items, etc., if the value is more than 50,000, all those conditions are satisfied, then even the jeweler will be required to generate an e-waybill. This also we are seeing most of the jewelers are not following. They are under the presumption that e-waybill provisions are not applicable to them at all. So to make it clear, e-waybill provisions are not applicable to jewelry, but e-waybill provisions may be applicable to the jewelry industry as a whole with respect to any other product apart from jewelry. So for coming back to the discussion of exhibitions, so if the exhibition is in the same state or another state or abroad, the movement should happen with the help of a delivery challan. For jewelry, we know that there is no e-waybill. For display, packaging items, etc., e-waybill is required to be generated subject to the specified conditions mentioned therein. Now, if the exhibition is for only display, most of the jewelry exhibitions are only for display, like UBM or IIJS. It is only for display. And when I'm talking about IIJS, though this is not my topic here, I would say that the IIJS exhibition would be one of the most beautiful exhibitions that we would see. Lot of jewelers across the country come, and a huge place will be used up to showcase their jewelry. So that this is not my topic here, but as we have visited IIJS, I can say that it is one of the most beautiful exhibitions that we have seen, that is IIJS. So, and I would recommend the chartered accountant should also visit once to see the level of IIJS at Mumbai or Bangalore now. So whatever it is, coming back to the discussion here, if the exhibition is only for display purposes, then delivery challan is sufficient for movement of jewelry. If the exhibition is for display cum sale, then delivery challan is sufficient for movement of jewelry, that is fine. And the person who is carrying the jewelry can carry an invoice book with him and issue a tax invoice directly. If it is another state, if the exhibition is in another state, then tax invoice mentioning GST can be issued. And if the registration is in the same state, then CGST, SGST, we can charge, which is fine. Now coming to the last discussion that we have here, which is composite and mixed supplies. As I said at the beginning of the webinar itself, that I'll be taking composite and mixed supplies towards the end, because most of us are already aware of these concepts. So I'll just quickly run through this. What is a composite supply? We know that section 2 clause 30 talks about composite supply, where it says that two or more taxable supplies are naturally bundled and supplied in conjunction with each other in the ordinary course of business, and one of which is a principal supply. So the example is given where the goods are packed and transported with insurance. The supply of goods, packing materials, transport and insurance is a composite supply, and the supply of goods is a principal supply. Let us take an example of jewelry industry itself. So now due to COVID, we are seeing that many of the jewelers are showcasing their jewelry through video calls. The customer is located in Andhra Pradesh. The customer is shown different jewelry through video calls, and this customer is purchasing lakhs of rupees of jewelry through video calls. Now, after making the sale, the jewelers are even levying freight charges for the transportation of jewelry. So the freight charges for transportation of jewelry, the principal supply is of jewelry and freight is only incidental supply. So in this case, the GST rate for freight is normally 5% and for jewelry it is 3%, as we have already discussed. So if both are supplied together, these are naturally bundled, and the GST rate on the entire value would be applicable at the rate of 3%. Mixed supply concept, clause 74. Mixed supply means two or more individual supplies of goods or services, and they are supplied for a single price. Example we see in Diwali sale and all, the canned foods, sweets, chocolates are clubbed together and sold. Let us take the example of jewelry industry to be precise, and in mixed supply, the supply which has the highest rate would be applicable for the entire transaction. So in case of jewelry industry, let us take this example. Suppose loose diamonds and jewelry both are supplied in the same invoice. Normally, see, there are a lot of debatable issues in every transaction. Composite and mixed supply itself is a huge debatable issue. So let us understand as a common parlance that normally with jewelry, loose diamonds are not sold. Loose diamonds are generally sourced from different states like Gujarat. So if I'm selling in the same invoice jewelry along with loose diamonds, which is not quite common. So loose diamonds and jewelry both are supplied in the same invoice. These are not naturally bundled. Jewelry studded with diamonds is common. That is different. Now that will become a composite supply. Now jewelry along with loose diamonds is not naturally bundled, as per my opinion. So GST rate on loose diamonds, we know that it is 0.25%, while GST rate on jewelry is 3%. Now as this is a mixed supply, then GST rate would be 3%. 3% rate would be applicable. So normally what we are seeing is they are getting these suggestions from their associations that if such supplies are there where there will be confusion as to whether it is a mixed supply or a composite supply, they are issuing two separate invoices. One invoice they're issuing for loose diamonds and charging at the rate of 0.25%, and another invoice they're issuing for jewelry and charging the rate of 3%. Let us discuss some examples, common examples for this industry. ABC Jewellers Private Limited sells gold ornaments of 50 grams for 1,50,000, and making charges of 25,000 are also charged, totaling the transaction value to 1,75,000. So what will be the GST impact on this transaction? This is a combination of composite supply, where the principal supply is sale of jewelry and the incidental supply is making charges. So the GST rate of principal supply, that is the sale of jewelry, would be applicable at the rate of 3% on the entire amount of 1,75,000. Next example, ABC Jewellers Private Limited sells jewelry to a customer in a jewelry box. Just deviating from the topic, one more point I would like to highlight here is that I had read one case law of, I don't remember the case name, where the importance of delivery challan was clarified. So in that case law, what had happened is, initially the jewelers were not following the concept of delivery challan. So the wholesaler had issued ornaments to the retailer on approval basis without delivery challan. And during that period, raid had happened at the premises of the retailer. Now the stock which is with the retailer is existing stock plus the stock of the wholesaler which he got on approval. Now the department said that as you don't have proper documentation for this, there is no proof that this stock does not belong to you. Hence, this stock is also yours, and accordingly the action was taken. So that's, I just randomly remembered that case. So I wanted to highlight here the importance of delivery challan that we have here is this. Another important case I remember is where a retailer told me that he had given pure gold to his karigar with the help of a delivery challan. One additional thing what the retailer has done smartly is he has taken the signature of the karigar also that he has received the pure gold. Now the karigar ran away with gold. Police case was lodged, but as the retailer took the signature of the karigar that he has received the gold, it helped him in deciding the case in his favor. So this is not in this provisions, but what I have seen is such practice, if we are following, no, it will definitely help the clients also, where they will obtain the signatures of the person who is receiving the gold also. So coming back to the topic that we have here. So ABC Jewelers Private Limited sells jewelry to a customer in a jewelry box. The GST rate on jewelry box is 28%, whereas the GST rate on jewelry is 3%. In this case, which rate is to be charged on the invoice? Now again, this is the composite supply and GST at the rate of 3% is to be charged. Next, ABC Jewelers Private Limited sells jewelry to a customer and in return gets old jewelry from him. There is no additional consideration paid by the customer. This is also a very common transaction where the customer gives old jewelry and takes back the new jewelry in the form of barter. So for the first transaction, that is receiving old jewelry from the customer, no GST is applicable as it is not a supply. Now for the second transaction, which is a barter, the retailer is giving new gold ornament to the customer. The supplier ABC Jewelers Private Limited in our example is in the business of jewelry. The supply of new jewelry to customer is taxable. And for the purpose of valuation of new jewelry sold to the customer, the open market value of the new jewelry is to be considered. So we can discuss this in valuations. Next, ABC Jewelers Private Limited gets an order for making an ornament. The retailer registered, and by the way, these questions have been picked up from the book that we had written, around 185 frequently asked questions for Gems and Jewellery Industry. So this is from that. I can even provide a PDF copy of that book after the webinar for everybody's benefit. So ABC Jewelers Private Limited gets an order for an ornament, for making an ornament. The retailer registered in GST provides a part of the gold. The remaining gold is purchased by ABC Jewelers. What are the GST implications on this transaction? In the following two scenarios. Invoice shows gold value and making charges value separately. Invoice value does not show the breakup of gold value and making charges. So in this case, what we are generally seeing is this example. I'll just explain you once again. In this industry, what normally happens is the retailer will either give a complete order to the wholesaler, where wholesaler himself will purchase the gold and convert that into an ornament and give it to the retailer. Or secondly, the retailer gives gold to the whatever gold he has to the wholesaler, and the wholesaler will either use it as it is, or if additional gold is required, the wholesaler will add additional gold and convert it into an ornament. So now the wholesaler has done two supplies. The wholesaler has provided the supply of making charges, and in addition to that, the wholesaler has added gold also. So how would this be treated if the value of invoice shows gold value and making charges separately, and the invoice value does not show the breakup of gold value and making charges? So in this case, the principal supply is, so in this case, where the invoice shows gold value and making charges value separately, GST will be charged at 3% for gold and 5% for making, as it is difficult to locate which of the two supplies is the principal supply because both the supplies are of equal importance. If the invoice value does not show separate breakup, then the gold value and making charges, this will be a composite supply and tax would be paid at the rate of 5%, being the rate for the principal supply, which is job work. So therefore, in this case, what we are seeing generally, the association, what the association is guiding the wholesalers is that they can, whenever they're using any additional gold or diamond, let us take another example for this issue, like the retailer is giving gold, pure gold to the wholesaler and asking him to make a solitaire ring. We all know that solitaire diamond is extremely costly. So if in terms of value we consider, it will be difficult for us to decide what is the principal supply and what is the ancillary supply. So the wholesaler gets the gold, converts that into a ring, and purchases solitaire and fixes the solitaire on the ring. So in this case, what would be the rate of GST? So here what we are saying is, in these cases, the associations are guiding the retailers to, or wholesalers to, issue two separate bills. One is for diamond and another for gold, or not for gold, because the gold has been supplied by the retailer. So they're asking the wholesalers to issue two separate bills, one for the diamond charging at the rate of 0.25%, and another for making charges charging the GST at the rate of 5%. Now again, this will be a debatable issue. We can say that the wholesaler is not giving the diamond loose and 0.25 is not applicable. It should be a diamond ring, and on the entire value GST would be applicable at the rate of 5% if it is a principal supply of job work, or 3% or 0.25% if it is a principal supply of diamond. So again, such issues are there in jewelry industry as well, which we have to decide on case-to-case basis. Next, what would be the treatment of wastage of gold that normally occurs during the manufacture of jewelry by a job worker? Wastage may be classified as recoverable wastage or irrecoverable wastage. If wastage is recoverable, is where the gold cannot be used. Irrecoverable means it cannot be used, that is gold dust. Such wastage is normal wastage, and it is already considered by the principal while sending raw material to the job worker. Hence, it is included in the amount of the principal, hence no GST would be applicable. So normal wastage, that gold dust and all, we can ignore. With regard to the wastage limits, no specific limits have been prescribed for wastage in jewelry industry for with respect to GST. And in case the wastage is recoverable, and now the job worker has two options. If the consideration, the principal is giving gold to the job worker, the job worker is converting the gold into an ornament and giving the ornament to the principal. The job worker is charging making charges for it, is one scenario. Second scenario, the principal is not paying any making charges and saying that whatever wastage you have got, that wastage itself is your making charge. So what is the GST implication in this transaction? So if the consideration paid to the job worker includes only making charges, the job worker has to return the wastage to the principal. Therefore, GST is payable only on the making charges, because the job worker is returning back the wastage to the principal as it belongs to the principal. Now, the consideration to the job worker could also be in the form of wastage. This is also very common in the industry. In such a case, the wastage will be a non-cash transaction, a non-cash consideration paid to the job worker, and GST will be paid on the open market value of the wastage. If the job worker is given a combination of both making charges as well as wastage as a consideration, then GST will be payable on the sum total of making charges plus the open market value of the wastage. So I have some other points also to be discussed, but I want to discuss the queries or the issues which the members are facing, so that it will help me as well to handle this industry better. So that's it for today's webinar. I thank the organizers for giving me this opportunity to learn. To my surprise, what I have observed is, though we have been dealing this industry for more than 35 years, and I'm in the second generation of practice, and I have been handling GST for this industry since maybe 2017 itself. Still, because of this opportunity given by your respected vice chairman and the other office bearers of the institute, it helped me in revising the entire provisions again. And I would say openly that I was actually enjoying to learn more provisions which are relevant to this industry, which I had missed at the time of my preparation. So this is a very great opportunity given by the institute, and I thank everybody for a patient hearing. Let us discuss the queries that we have.
Yeah, thank you, Vivek, for your wonderful presentation. Vivek, we have some question answers. Can you please take up? Are you able to see?
Yes, I can see, sir. I'll take up.
Due to some technical problems, I could not read out actually. I logged out and came.
No problem, sir. I'll take up. In ITC 04, there's a question from Mr. Vijay. ITC 04, there is no category of retail trader. That case, for retail traders, which category to be opted for sending of ornaments to job worker? Mr. Vijay, I think, I'm not sure whether there is some category mentioned in ITC 04 for wholesaler or retailer. It generally says principal. So the retailer can also be the principal, the wholesaler can also be the principal. When they are moving the jewelry to the karigar and receiving back and they're moving the gold to the karigar and receiving back the ornament from the karigar, even the retailers can file ITC 04. Any person who is the principal can file ITC 04. So if I click on the next question is from Mr. Naga Vivek Anand. Sir, what is the value to be considered in case of exhibition or sale of approval basis or partially sold for generating a delicate challan? Sir, as we all know that it is difficult to predict beforehand at what value the jeweler would ultimately sell the jewelry. We all know that it is decided by them by seeing the customer, seeing the capacity of customer. So it will be difficult to predict the sale price at the time of movement of jewelry. So I would suggest that it is better to move the jewelry at book value. And when we are making the tax invoice, then we can make as per the sale price. That's my answer for this question, sir. Next, Mohit Agarwal is asking, can you speak 10 minutes on hallmarking in jewelry sector? Sir, hallmarking itself is a very big challenge that everybody is facing. But still there are some relaxations given in the jewelry sector for hallmarking. I would say that I'm not dealing in hallmarking, but I have read a few provisions where they have to mention some hallmarking charges and the rate of hallmarking charge on the invoice. They should issue a delivery challan to the hallmarking center and mention the names of the persons who will be carrying the goods for hallmarking. And I have even heard from the industry that it is taking a lot of time for the jewelry to be get hallmarked. So they are facing a lot of challenges in that. Yes, of course, this itself is a very big discussion that we can discuss separately. So I would say that that would be my answer as of now for this hallmarking. Thank you. Next, Mr. Abhijit is asking, will GST be charged if a jeweler sells his personal or family jewelry in an individual capacity? Good question. So will the GST be charged if a jeweler is in the business, but we are not considering or focusing on business. We are saying his personal or family jewelry in an individual capacity. So if he's, as per my understanding, in my opinion, if he's bringing that jewelry to his shop and then selling, then it has become a business transaction. It is no more a personal jewelry. But if he is selling to another person or directly on his personal capacity, then again, I don't think GST is applicable. So because now it even depends on the nature of the business. Suppose the nature of the business is a private limited company. Now the individual is a separate person and the company is a separate person altogether. So on his individual capacity, when he's selling, obviously then GST is not applicable. That is, in my opinion, I think that would be the right answer. Let us, if you have any other opinions, then we can surely discuss it. Thank you. And then Mr. Narendra is asking, my client is bullion merchant. As per Rule 86B, he has to pay 1% of outward liability every month. How to tax plan against Rule 86B, sub-rule B? So this itself is also a very big discussion of Rule 86B, but I would request you to drop me a mail. We can definitely have a discussion on Rule 86B and take this discussion further on this. I thank you for raising the query. So I think the questions are answered, sir.
Yeah, I think everything is over, sir. Yeah, thank you, Vivek, for your wonderful presentation. It is actually a lucid one, and most of the members generally we used to hear, but nobody practices more actually in this field. Thank you for your valuable time and address. As a token of appreciation and gratitude, I request you to kindly accept virtual certificate of appreciation. I request Mr. A.K. Reddy to present. Yes, yes. Yeah.
Thank you very much.
Thank you, sir. Please accept this certificate, sir. We'll send you the hard copy very shortly.
Thank you. Thank you very much.
On behalf of Hyderabad branch, once again, thank you very much. Thank you very much for you for kindly accepting your request, sir. Thanks to all the members once again. I request every member to join on Saturday for new practical approach on GST, which is going to be posted in the website very shortly. I think, sorry, we already